The Federal Reserve announced that they were going to cut interest rates 25 basis points yesterday. But what news came out that's even bigger than that? They also announced some stimulus. Guys, anybody that's been meeting with me over the last several months, they've always been asking me, we're waiting for interest rates to go lower. How do interest rates go lower? And I've always told them the one thing that's lacking from here to there, because we're already kind of towards the bottom, the one thing that's lacking is stimulus. Well, that was part of the announcement yesterday, so it's kind of a really big deal. So we're going to be watching this closely. First, I wanted to take a second and kind of give you guys some inside view of our Treasury Secretary, Scott Bessent. One of the things that's interesting about this job and working in finance in general is you don't get caught up in the politics quite as much. What you get to watch is actually what the walk, if you will, of what people do. And our current Treasury Secretary, Scott Bessent, a very successful individual, very intelligent individual. Do you like him, do you not? That's, I guess, up to you. But some of the interesting decisions that he's been making, as you know, the U.S. government has a record high amount of debt. And if you don't know this, that debt isn't just like a 130-year mortgage. They have literally a gazillion debts. I don't even know how many different debts, but they have debts ranging as short as a month and as long as 30 years, and they have a whole bunch of debts. Well, a few years ago, we had a different Treasury Secretary, and she made some really, really big mistakes. Now, whether she did that because she was incompetent or whether she did it just because she's human, we don't know. But when interest rates during the pandemic were at the lows, the absolute lows near zero, instead of borrowing 30-year debt, like she could have done at the very lowest interest rates available, she kept doing short-term debts. And those short-term debts have all matured, and so all of the short-term rates that she was able to lock in have all matured already, and so now the federal government's already paid those back, and they're having to re-borrow more money with bigger interest rates, the interest rates that all of us are familiar with. So it's kind of like having a 2% mortgage, making it paying it off fast, like a 5-year loan or something like that, and then taking out a 6% mortgage instead. That's basically what the federal government's been doing for the last few years, which, as you can see, it costs all of us taxpayers a massive amount of money, billions and billions of dollars. Scott Bessent, on the flip side, has been staying almost strictly on the short-term securities as he's borrowed money for the U.S. government, and counting on the long-term rates coming down. And with yesterday's announcement, that looks like that's going to be a genius move, because the long-term rates, especially the Treasury rates, are likely to come down. We're down flirting with 4% right now, which is one of the lowest levels it's been since he's been in office, and probably it's going to be coming down even lower. So, what does all this mean to you? Well, I've been telling my clients for the last several months who've been asking, because our interest rates have already been awesome. We are currently, like right now as of today, tying with the best that we've seen this year on 3 different occasions. And those same, so we've been same, right? Each of the times our interest rates today are about the same as they were those 3 moments, which tie with the very same of the best rates that we saw last year for just a couple weeks. And so if you take all of those moments, those are the best rates that we've seen since 2022. And people have been asking me, how do we see rates even lower than this? Is it worth waiting for? And so one of the most exciting things that happened with yesterday's announcement is that the Federal Reserve announced that they're actually going to be purchasing $40 billion a month in treasuries. Now, they're not purchasing mortgage-backed securities, which is what they did the last time they stimulated. $40 billion in treasuries is going to have an impact on the treasury cost and the interest rates of the treasuries. It's not going to have the same kind of impact on mortgages like buying mortgages would. But it is still going to have an inadvertent impact, because there's going to be a bigger appetite in the market for bonds, which will bring those rates down. In order for those rates and all the rates in the bond market to compare and compete with one another, they'll all need to come down a little bit. So mortgage interest rates now have a pathway to come a little bit lower. We'll see how much. $40 billion a month is a far cry from the $200 or $300 billion a month that the Federal Reserve was doing back in the pandemic. So don't get your hopes up yet. And I will throw in a cautionary tale. Federal Reserve purchasing anything right now. So inflation is much better. It's in the 2.5%, 3% range, depending on which indicator you're looking at. But it's not 1%. It's not looking like it's breaking to 1% or even into the deflationary range. So if the Federal Reserve starts to stimulate, which is what they just announced, are they going to then stoke up more inflation? So that's one of the big concerns. Why are they stimulating? Well, because the jobs market is much weaker than I guess they've been previously agreeing that it is. And so with the new recent reports that have been coming out, jobs market's showing signs of a lot of weakness, and they don't want to have some kind of depression, so they're going to try to stimulate things a little bit so businesses can do a little bit more business and thereby hopefully hire a few more people. That's kind of the idea. So anyway, long story short, what that kind of means to you is that the Federal Reserve is basically trying to support the jobs market so it doesn't get worse, and they're trying to give us slightly lower interest rates, which definitely is great if you're looking at either buying or refinancing a mortgage. So, or a car loan, by the way. So anyway, there's some good information for you. Hopefully that is useful to you, and feel free to shoot me out some questions if you got any. If you have not refinanced yet, or if you have questions about refinancing, or if you've been waiting to buy, let's get started. Let's go ahead and take a look at things, and we may only be staging you for a lower moment because rates aren't there yet. They just moved a little tiny bit since yesterday. But who knows? We'll have to see the path over the next few weeks if they don't actually start to get better and better and better. And so staging is now beginning. So there we go. DM me, staging, and we'll talk to you soon.